Housing starts lower, mortgage rates are higher, builder sentiment, though, is strong. And by the way, some open houses still attracting huge numbers of potential buyers. Needless to say, housing's a little bit of a mystery right now. So what's really going on here? Let's bring in Glenn Kelman, CEO of Redfin, for more. Glenn, good to have you back on. Yeah, I'm waving at you from a distance as well. I got a good friend of mine who's a realtor in New Jersey. He told me that there were 70 families looking at a home last weekend. 7-0. I mean, yeah, I was gobsmacked.
Wow.
I see you kind of going, what? I know real estate is local. What are you seeing? Is there a national trend anywhere?
Well, it's consistent with the national trend. So normally in a downturn, inventory shoots to the roof, but that hasn't happened. There's been a nominal increase, 40% from a calamitous pandemic low, but we're still at half the level of inventory we had 2016 through 2019, and that was a seller's market. So because so many people got a loan at 3%, the listing customers we would normally have are deciding to stay in their place or to rent it out. And that means that there is going to be a generation of millennials who are not going to be able to find a home to buy. There's just not enough homes on the market.
And maybe that's why we're seeing, in some areas anyway, a much stronger market than one might expect. There's no national housing collapse, is there?
Well, it was pretty rough in November, and then the market got significantly better in January, but now demand is pulling back again. So we get real-time data on how many people are touring because we run this big website and a brokerage, and so we see all the people looking at properties, and demand was down about 35% from pandemic highs in November. That moderated into the teens in January, but it's ticked back up to about a 20-25% drop in February. When rates go up 75 basis points over the space of 2 weeks. Some people are going to freak out.
Well, I guess here's my question regarding rates. I know higher rates cut into affordability. You mentioned November. I'm trying to think about what the bond market did in November, Glenn. Is it rate volatility?
Were above 7%.
Yeah, they were moving quickly. And does that kind of paralyze buyers? At least now, people kind of know what they're going to have to pay, rather than like, oh, gosh, they keep going up. Let's just sit it out and see where they end up. I don't know.
Yeah, maybe in early 2022, people were willing to shake off rate increases, but now the market's gotten a little bit spooked. And so rates and housing are moving in opposite directions. When rates go up, housing demand comes down. It's a pretty strong inverse relationship. So we haven't seen that take its toll on the housing market in February yet. But at the very top of the funnel, people looking at properties, some of them are starting to step back. Others are shaking it off. It's not as strong as it was in November, but it's still a setback.
We're in the media, in case you didn't know. We're obsessed with round numbers. We love just big round numbers, right?
Okay.
So
I'll do my best.
That's just, for whatever reason, that's just what we do. So if we're at 6.99% on the 30-year mortgage in a few months, does that matter if we get to 7.00? Does that 7 handle, as we would say in the business, is that going to terrify buyers? Do these kinds of small but psychological signs matter in real estate?
I think so. I mean, part of it is a psychological barrier being broken. Part of it is that people are just trying to settle into a groove. So there was a negative groove at the end of 2022, and it was just important for people to go away for the holidays and reset. It felt like buyers came back into the market with more than the usual vim and vigor in January, which was unexpected for us. And I think if folks get thrown off their game, especially if it hits 7, they might take a step back. But right now, there are some people in the market who want to continue and others who are saying, no mas.
Glenn, it's an interesting market. We're glad you're coming on because you've got all that real-time data. You know what exactly you know what you're seeing. It's a stressful time for a lot of people in the real estate industry. We get it. Pockets of strength. Come back on anytime, Glenn. Thank you.